everyone. Our project focuses on Bitcoin price prediction using machine learning and selected market indicators. Bitcoin has become one of the most volatile financial assets in recent years, attracting increasing attention from investors and researchers because of its rapid price movements and high uncertainty. Compared to traditional financial assets, Bitcoin prices tend to move much more aggressively and unpredictably, making accurate forecasting particularly challenging. Because of this, we wanted to explore whether machine learning models could provide a stronger forecasting framework, especially when combined with broader market indicators. Traditional forecasting approaches often struggle with nonlinear market behavior, while machine learning techniques are better suited for identifying hidden relationships and complex market patterns. The main objectives of our project were to analyze Bitcoin price behavior, evaluate the relationship between Bitcoin and selected market indicators, compare random forest and XGBoost models, and identify the most important predictive variables contributing to Bitcoin price forecasting. For the dataset, we use historical Bitcoin market data together with selected external market indicators. These included Bitcoin open, high, low, close, and volume data, together with Nasdaq and gold variables. We selected these indicators because they capture cryptocurrency market behavior, technology market sentiment, and broader market movement. The clean dataset initially contained 3,286 observations. After feature engineering and rolling window transformations, the final engineered modeling dataset contained 3,257 usable observations. To improve the modeling framework, we also introduced engineered technical features such as lag prices, moving averages, rolling volatility, and daily returns.
Next, we conducted exploratory data analysis to better understand Bitcoin price behavior and its relationship with broader market indicators. Figure 1 shows the Bitcoin closing price trend over time. The chart clearly demonstrates substantial volatility across the sample period, with several strong bullish rallies followed by sharp market corrections. Frequent price reversals increased forecasting difficulty and reinforced the need for machine learning approaches capable of handling nonlinear behavior. The chart also shows that Bitcoin does not move in a stable or predictable pattern, which supports the inclusion of engineered technical features in the modeling framework. Figure 2 presents the correlation heat map. As expected, Bitcoin open, high, low, and close prices were strongly correlated with each other because they are directly related within the same trading period. More importantly, Nasdaq indicators also demonstrated meaningful positive relationships with Bitcoin prices. This suggests that Bitcoin increasingly behaves like a broader risk-oriented financial asset influenced by market sentiment and investor behavior. Gold variables showed comparatively weaker relationships relative to Bitcoin and Nasdaq indicators, suggesting that gold acts more as a comparative market reference rather than a dominant predictive driver. Figure 3 compares normalized Bitcoin and Nasdaq trends over time. Although the two assets do not move identically, they often follow broadly similar movement patterns during periods of optimism and market uncertainty. This observation supports the inclusion of broader market indicators within the forecasting framework and suggests that external financial market sentiment contributes to Bitcoin price behavior.
For model development, we first built a baseline random forest model using only core Bitcoin variables such as open, high, low, and volume. The baseline model achieved strong overall predictive performance and provided a useful benchmark before introducing more advanced feature engineering techniques. To improve the modeling framework, we later introduced additional engineered features including lag prices, moving averages, rolling volatility, daily returns, Nasdaq indicators, and gold indicators. The final XGBoost framework was then trained using this expanded engineered feature set. This table presents the model comparison results. Both models achieved strong predictive performance overall. Based on the evaluation metrics, the random forest model produced slightly stronger numerical results, while the XGBoost framework provided stronger interpretability through feature importance analysis and incorporated the engineered feature space more effectively. Figure 4 shows the feature importance analysis. Historical Bitcoin variables and lag features demonstrated the strongest predictive influence, suggesting that recent Bitcoin price behavior carries substantial information about near-term market movement. Nasdaq indicators also contributed meaningfully to prediction performance, which further supports the earlier correlation findings from the exploratory analysis. Figure 5 compares actual versus predicted Bitcoin prices. The model was generally able to follow the broader direction of Bitcoin prices reasonably well, although larger deviations became more noticeable during periods of heightened volatility. This behavior is expected in cryptocurrency forecasting because sudden speculative movements remain inherently difficult to predict accurately. Overall, the project demonstrates that combining historical Bitcoin behavior with engineered technical features and broader market indicators improves the overall forecasting framework. The findings also suggest that Bitcoin increasingly behaves like a broader risk-oriented asset influenced by external market sentiment. Although machine learning models were able to capture meaningful market relationships, cryptocurrency prediction remains highly challenging due to extreme market volatility. Thank you.